Hi traders, and welcome to the technical analysis wrap on Friday the 27th of March. So I've seen some great moves since the webinar on Wednesday night. You can see the markets have moved, obviously, in a lot of them in the direction that we actually wanted them to, which is good, and they've approached some of those key levels that we were talking about. So we'll jump straight into the charts and see what has presented and where we can trade potentially for next week's setups. So we'll start with the Aussie on the daily chart. It's always a good place to start when we're looking for any potential setups. But we can see here that it's obviously had a pretty big kickback from the lows that it reached a couple of weeks ago now. We've got probably going back to the 4-hour chart probably really tells the picture. We can see that we've got a series of obviously higher highs and higher lows forming, but it is getting to a level now where we're starting to probably take a little bit more notice. It's above the 60 cent now, or pretty much at the 61 at the moment. So it's going to be D-Day for this now. The moving averages are about to cross. I'm still not totally convinced that it's going to go blasting long, just mainly because of the fact that there's probably going to be a little bit more US dollar strength, which tells a better story, but we'll look at that a little bit later on. So you want to be approaching this one with a little bit of caution. It's definitely at a pullback zone, so potentially it could reach up to this 20 marker before it falls, so maybe high 61s, but I'm not convinced that this is just going to completely keep blasting up and reaching the mid 60s again. It's still too much economic weakness going on for that to happen in Australia, so I think we'll just stick with potential shorts if it reaches these levels here. The only reason we would change our minds on this one is obviously it starts to continue with the higher highs and higher lows. I would want to see it definitely close above the 20 on a moving average on a daily chart. That's the only thing that's going to convince me to start taking longs on this one. Up until then, we'll just look for those key pullback zones and probably join the trend to the downside. All right, we'll move on to the US dollar CAD. We can see here, on Wednesday night we were hoping that it was going to pull back to somewhere near the 20 moving average on the daily chart. It's very, very close to that now. I'd argue that it's probably close enough if you're looking for a long. I mean, it is a Friday, as we know, and trading over the weekend is going to be a significant risk when we've got so much going on. So you do definitely have to trade for a little bit of trepidation if you are entering positions for next week on a Friday. Unless it's absolutely perfect, I would be more inclined to wait until the Monday to place a trade. So we want to avoid that gapping risk, of course, but it's certainly at that level that we were talking about. The US dollar strength, a few of these have pulled back to very key zones. The CAD's only one example, but you can see here it's very, very close to the 20, a very key zone for it. So certainly one to keep an eye on. Not convinced it's completely done on the long yet. I think it's actually probably a really good pullback zone. If we'll draw a fib actually on this particular move, and we'll see what that gives us, and I think we'll find that it's sort of closely approaching that 50. In a perfect world, we would see it somewhere around this level, and then we'd see a change of trend on a smaller time frame, on a 1 hour potentially, to get a higher high and higher low sequence to tell us that the change of trend has happened, and basically we'll take off from there. So that would be amazing for us. Let's keep an eye on that one. All right, we'll move on to the US dollar Swissy, telling us a very similar tale. We can see here that we've hit those highs. We were talking about this last week, that this is probably the sell-off zone. As you can see from this level here, it's going to find it very difficult to get past there in any sort of hurry. It's come back to the exact place that we would want it to, the support line here. Even though it's crashed through it a little bit, I'm probably going to find a little bit more support here, for my trading, especially that I'm thinking if it's going to go long, it's going to be in this area here, middle of the Bollinger Band, as we can see. So ideally, we want to see now a change of trend on a smaller time frame, probably a 4 hour or 1 hour series of higher highs and higher lows from around this zone. And we've got a very clear target. Either we can go for the 200, which is obviously a very simple target, or potentially to test these highs again. But with US dollar strength, looking like it can certainly play out again. We'll look at the dollar index a little bit later, and a few of the opposite sides, the euro and the Aussie, like we talked about earlier, potentially at reversal areas. We can definitely look for some of that US dollar strength, and that would coincide with a nice bounce from this level here. Okay, we'll go on to the US dollar yen. Again, yeah, basically a mirror of what we've seen. This is an extraordinarily strong zone. You can see here that it's been resistance, it's been support. It finds itself right here again, and it's come here very, very quickly all the way since Wednesday. So people who are trading that we saw on Wednesday night in the webinars, yeah, hopefully you've caught that move. Obvious target here. It doesn't mean that it can't go lower, of course, but it's a very, very strong support zone. Look, we'll draw a fib on this one as well, because some fibs are lining up here, quite well actually. They're you can normally see, you can see that there. Look, it's in the middle of the 38.2 and the 23.6. For those who actually do the Fibonacci's from the bodies, which I like to do, it actually just paints a more steady picture when you're using the closes only. You'll find that it's right there. Still, it hasn't really changed all that much actually, the Fibonacci still, because you've got enough wick movement on both sides to actually level it out. So it's hovering around that middle of the 38.2 and the 23.6. Anywhere in this zone, again, I can't stress enough that when the markets are volatile, you need to be able to pick your zones, not so much a particular area, pick a highlighted zone. You can see here that all of this level here, this whole area here, is going to be a really good reload zone. So what you're looking for, again, smaller time frame change of trend to the upside. You don't just jump in just because it's reached it. Obviously it looks like really, really good support. It doesn't mean that you just jump in. Okay, you need that confirmation on the smaller time frames to start making higher highs and higher lows to show us that the smaller time frame trends have changed. And obviously we're going to aim for the highs again. The first point of call will be this area here, basically around the 110, and then potentially push on to the 111 and 112 if the market gets strong enough, if the dollar strength continues. Okay, we'll go on to the S&P 500, one of the indexes that we obviously love, drives the world, as we know. It's had a couple of very, very bullish moves. A lot of this has got all to do with the stimulus package and nothing to do with the economy stabilizing, that's for certain. Record stimulus package obviously been given now and passed, so that's brought about that big move. It's at that level now that we are probably expecting. You can see here that we've got that 26.15 line already drawn from last week. If it's going to reverse, this is a level that it's more than likely going to reverse from. This is just probably a temporary pullback. Not so much artificial, because look, the stimulus package is there. There's no question about that. But we are no closer to isolating the vaccine for this virus. It could happen any day, but it hasn't happened yet. The pandemic is still well and truly running rampant around the world. There's no reason to get excited that this market's going to go anywhere near 3,000, I wouldn't think, until we get a cure and some stabilization of the economy. That has not happened. This has just been stimulus. So that said, I'm still looking for the shorts here, so looking for the good pullback levels. This is the first level that we would probably expect that's going to happen, so certainly keep an eye out. I would want to see some very bullish candles reaching the middle of these levels before I would be getting excited about going long on this one again. For mine, when a market's moving on stimulus and there's still so much bad news around, we've got to be very, very mindful that the risk is still to the downside, certainly not to the upside. Okay, we will go to gold. Gold is starting to make those higher highs and higher lows. Everybody got this off the 20. I know that a lot of people have contacted me and said they got this trade, which is awesome. This is on a 4-hour chart here, so we can see here that it's come back beautifully to the 200, taken off there again. It's printed a new high. Look, we need to go to a daily to really get the true picture of what gold actually did here. You can see that it's had just some massive moves all the way from these lows straight off that. I'll have to draw that line there because I've taken it off, but you can see here it bounced straight off these areas. Absolutely golden opportunity to go along there. I know a lot of people did. Well done to them, because you're obviously paying a lot of attention to roll reversal, which is one of the key aspects of technical trading. So that's excellent. Great move, big burst up. For mine, it's probably just forming a consolidation pattern. I do like it. I think if the market starts to fall away again, gold's probably going to continue on its merry way and hopefully reach these highs. But at the time, you've got to trade the smaller time frame changes of trend and pick your scalping opportunities. Still not long-term trading or intermediate time frame trading. We still want to be in the scalping zone, picking the good zones, and going for the short and sharp moves in this uncertain time. The dollar index is a really interesting one at the moment. Again, we talked about this on Wednesday. It's come all the way back to the level that we were hoping it would. Very clear role reversal area approaching. You can see that here, not very far away now. Ideally, it'll get down to the 99, which would be awesome. That coincides with all of those US dollar based pairs that we're thinking could potentially go along from their role reversal zones. This would make a lot of sense for that to happen. So we'll be looking for some sort of a bounce up from the dollar index and hopefully onward and upward. That's only, of course, if dollar strength happens. So this, I'm not necessarily saying I'm going to trade this, but this bodes very well for those long positions on the yen, the CAD, and indeed the Swissy, which are very, very good technical setups if this is to reverse and go up. All right, the last one we will look at is the Euro USD, which is obviously the opposite of all of those US dollar pairs. It's going to do basically the opposite. For those to go up in the direction that we think it's going to go, we need the euro to drop. So it's fast approaching those zones right here. We can see here that this is a very serious resistance zone for it. We've got all of these touches right through here. You can see that it's been I'll extend this trend line that I set up horizontal. It's going to coincide with a 200 moving average right there. If it does reach these levels, even if it sells off from here, it's pretty close. Again, I can't stress enough that you need to make zones and keep an eye out on the smaller time frame changes of trend. If it changes here and you see a 1 hour or 4 hour change of trend starting to happen and it confirms, you don't need to wait for this level because the markets are too volatile. It's not going to be to the pip. But this is a very, very important zone for it. And I would fully expect that for all those US dollar based pairs to go up, the euro must go down from this level here. That's how it'll play out. So, and at the very least, this target here at the 109 will be a very first target, and potentially, depending on the strength of the US dollar, if it's really, really strong, breaks through those highs on the other pairs, more than likely we're going to see those 107s again. So very interesting trading levels, and certainly worth keeping an eye on, setting your alerts. Like I said, I don't think you should be jumping in heavy on a lot of trades over the weekend, because obviously we've got a big risk of gapping when there's so much news. Everything's changing on the hour, let alone on the day. So you've obviously got to be really careful, but keep an eye on these levels, set alerts, and Monday could provide some really, really good opportunities. Hopefully we don't get a lot of movement. In a perfect world, these levels will stabilize overnight and open up here on the weekend. That should give us a really good clean slate for trading on Monday to hopefully plan out for the week at these levels and give us a good starting point. Okay, so I hope everybody has had an awesome week's trading. We've had some really good moves. Hopefully everybody's been able to catch them and keep their stop losses all safe away from the volatility. Don't forget, add a little bit more to your stop loss that you normally would, only because of the volatility. But again, keep those zones alerted so you don't miss some of these great moves that are presenting at the moment. Have a great weekend, everybody. I look forward to seeing you all next week.